In this video, we're going to look at multi-chart analysis. I want to take a look at a couple of different patterns and look at a couple of different ideas. First things first, we try to get back to a deeper chart like a weekly to help us make decisions for our, not only our day trading, but for longer term accounts. So if you are in a position to work 401ks or retirement accounts, you're going to try to keep, if the market is advancing and you like swing trading, you're going to try to grab a couple of months of a trend trade whenever possible. And as such, you're going to ride the trend. And you may have one account where you're scalping against it with day trades and another one where you're going alongside with some position trades. So the first and foremost idea is to find the trend in play and find the chart in play. So deeper charts right now, obviously the weeklies and the dailies are in play, driving and thrusting long side. So by looking at the deeper charts, we already know that the primary trend is up until proven otherwise. So these are our basic charts that we want to look at to help determine, are we too stretched away from the pink line? Are we too far away from the blue line? Are we going to get a pullback, and then if so, add into the position as long as it's working? Or are we in fact just fighting the trend and we should just keep focused on the upside until it stops working? And my belief is, yeah, we keep focused on the upside until it stops working. So most of the trends I'm looking for are obviously trends to the upside until proven otherwise, and that is still basis this 1440 area that is the low for the year. If we look at a intraday position chart, certainly we can find that the 10-minute chart is a good one for Globex. 10 to 15 is a day in, day out is a chart that we want to look at. 5s are okay, that's a fast chart. But basis Globex, I want to look at a 10 or a 15, and I want to see the slope, and I want to see the architecture and the market structure, and most importantly, how does it fit in with other charts? Because these are my primary fast charts, and not the only ones that make a difference. If I'm looking at a 60-minute chart, for example, I can see beautifully where this gets supported. So when these line up in the same neighborhood, it adds strength and confluence to our decision-making process. 30 is a little bit overdone here, but it tail and it quickly bounces back, and we can see the 60 is why. Daily chart says up. So in using multi-chart analysis, the whole framework, everything works together, and that's really what we try to do, is understand how these relationships work with each other. If we go to a chart like a 480 or a 240, nothing on it, and you can certainly put obviously moving average on if you want, but I want to illustrate the clarity of a pattern that we can easily see. If we look at a little bit bigger pattern, a little bit bigger structure and time frame, things will jump out at you if you just let these kinds of things penetrate your mind, and you'll see breakout areas like this that need retesting before we're done. And those are places we want to make note of when we do break out, because eventually they will be retested. If we go to a RTH chart, we can see that if we drop back from our normal 5-minute chart, something like a 10 or a 15 gives us a little bit better perspective. So even though we'd like to see the 5-minute chart and what's going on with that, it's not always going to be exact, and in fact sometimes it will actually deceive us. So we try to drill it back to a chart that may or may not be in play, a little bit off on the previous few days. And if we put a 15, we can see that the last few days prior to this day actually were sideways. We had the vault up and then sideways and come into the blue line and push up and come back in and push up and come down to it and back up. So if we drill back just to a bit deeper, don't forget the market is not moved by us, it's moved by the big boys. And in the footprint of the big boys you can clearly see. And this is how we observe their footprint. There's absolutely no doubt where they're coming in. And where most traders are trying too hard to break areas like this 37, 38 area, the big boys are saying, okay, it's time to buy. This is where I'm going to add in. The principle of adding in when we come back to the blue line. So I think if you would like to be a better trader, you need, and I need, to focus on what the big traders are doing. They're the ones that move the market, and we want to be going in the same direction as they are. So learn to anticipate where they will probably enter trades. Try to get in just ahead of them and let them push us up. And if we're wrong, then we take our stop out and say, okay, I guess they were sleeping today. So that is how I like to use the principle of intermarket analysis, and using a number of different charts to make decisions. And all of these support each other. The more you have pointing in the same direction, the stronger the trade. So learn to use the deeper charts, find the chart and play, and I think it will help your intuition as well. So thanks for listening, and we'll catch you on the next video series.